There are senators who won't agree to this, Doug. I'm looking at Orrin Hatch, for example, who doesn't like the idea of corporate interest going away, the deduction for that going away. How will this document appeal to enough senators for it to pass?
I think the biggest thing is the commitment to get something done. No one likes the current tax code. Doing nothing is actually dangerous. We've seen, lots of headquarters, U.S. headquarter companies move overseas, and those kinds of trends are troubling to everyone. So a framework like this is appealing in the commitment to get tax reform done. It's a commitment to have a pro-growth tax reform with incentives to invest in the U.S., innovate in the U.S., hire in the U.S., fix the international tax regime. And then, of course, there are the places where they will disagree. And you've highlighted one, and the tax writing committees are going to go through regular order. They're going to mark up bills and take votes and go to the floor. And that's where those disputes will have to get settled.
Yeah, I mean, Florida's Carlos Corbello, he's on the Ways and Means Committee. He says there are pay-fors that might actually be, good elements of tax reform. What could they possibly be that might make this at least a little closer to deficit neutral?
They're going to have a lot of loophole closures to make it deficit neutral. The international tax rules are intended to be revenue neutral in and of themselves. That means that they're going to write base erosion rules, the anti-profit shifting rules that close off the move to the revenue loss from a move to a territorial system. There's a commitment to do that. There's experience in the House for having done that. Former Chairman David Camp walked through that exercise several times. So there are elements of very good tax policy that'll level the playing field from a tax perspective and let capital markets allocate capital. That would all be beneficial to the United States.
Doug, I mean, if it's beneficial for the United States, paint the picture what it means for growth. What do these proposals mean for future growth in the world's biggest economy?
Yeah, I think that this is good news for the middle class, not just for what's written down in the way of doubling the standard deduction and changing the rate structure. It's the fact that the U.S. economy has been stuck in a low gear with poor productivity growth and poor real wage growth. And this tax reform removes a bias for foreign production over domestic production. We go to a modern international tax regime. It does, in fact, lower the corporate rate dramatically, and that's the single most anti-growth tax rate in the data. It lowers taxes on pass-through businesses, where over half of the U.S. business income is reported. Those are all strong messages to the business community that there's a commitment to have more rapid growth, and that would translate into better wage growth for the middle class. And that's the key to being successful in this. My guess is they're looking at something that can raise the trend growth rate in the U.S. by, several tenths of a percentage point. That's important.